I was asked this the other day, what's the most important issue that the profession's facing going forward? And I said,
hello and welcome to Simply Tax. Now, I consider myself to be pretty darn lucky to truly enjoy what I do. And I'm always proud to introduce myself as a CPA and to be part of what I believe is a great profession with truly endless possibilities. So then, you might imagine my excitement to share with you on the podcast today a conversation I had with Todd Shapiro, the CEO of the Illinois CPA Society, and Tom Murtagh, the current chairperson of the Illinois CPA Society and the leader of BKD's Chicago tax practice, who I have the privilege to work with in my day-to-day practice. I have a tremendous amount of respect for and have learned a great deal from both Todd and Tom, and it was a true honor to chat with them fresh off of a road tour of town hall meetings that they led across the state of Illinois to answer the question you just heard Todd ask at the top of the episode here. Whether you're considering a career as a CPA, you're new to the profession, you're someone who has been a CPA for more years than you can remember, or someone who hires and works with a CPA, I think you're going to take a lot away from our conversation today that looks at both the bright spots and the challenges to the future of the CPA. Now, with a promise like that, we'd better go ahead and jump straight into the interview. But before we do, I'd like to invite you to better get to know Todd and Tom, hear their path that led them to where they are today, and even find out what their favorite Star Wars movie is with the Beyond the Numbers video for this episode that's available on our Simply Tax YouTube channel, which we've also included a link to in the show notes of this episode. It's available at bkd.com/simplytax. You know, I wanted to talk to both of you because of the perspective that you have on the profession right now. And I know you've kind of done a little bit of a road tour here with some of the town halls, the two of you. And so, Todd, maybe I'll start with you and the topic that I feel like is probably, it's an ongoing and developing one, and that's how the profession has been shaped by or impacted by the pandemic that we're kind of still contending with here.
yeah, I don't think that the end of that book is written.
Yeah.
From a financial sense, a lot of firms had record years. I mean, unbelievable years for a multitude of reasons. The two biggest reasons, or three biggest reasons. One, a lot of those firms were providing services to their clients, whether or not it was help with PPP loans or ERTC. And in many cases, they were charging fees for those, and it became tremendously profitable, helping them, complete the forgiveness portion of the loans. So from a financial side, it was a hugely favorable, positive experience for the profession. I know very few firms that didn't experience that. From a business support side, it was a wonderful opportunity to actually get beyond what I refer to as level one services or traditional compliance services, tax preparation and audit engagements. Businesses needed a lot of help in many cases in figuring out cash flow just to keep the doors open. So it provided a lot of opportunity for CPAs to get beyond that. Now, I will say, and what's the impact you said on the profession? The question now is, what do we do with that? Do we go back to our traditional compliance services and have that be our main thing we do, or do we continue to try to provide insight? Even in the pandemic, one of the things I believe is we need to be more proactive in doing that. And it was reactive. Clients needed help. We provided that help. But we demonstrated to clients that we could do more than just compliance in many cases and help them think about their business. So I think it was from that side, it was, so you have three different perspectives. One is the profit, two is the different type of service, and three, the impact of the pandemic, which is affecting a lot of businesses, not just the accounting profession, is the impact on the workforce, which is, I refer to the last, whatever it is now, almost 19 months, 20 months as, the greatest management experiment of the last 100 years that no one planned for.
Right. Just living it in real time, right? And I want to dig in on those workforce expectations a bit as well. But maybe before we do, in kind of the industry side, because we talked to kind of those like on the public accounting perspective, those in the profession that are on the industry side, in those tax departments or in those as CFOs or whatnot, similar type, I guess, how did it impact them, or anything you would add there?
In a lot of companies, they were trying to keep their head above water. So if you worked in the corporate side, if you were a controller, or if you were a CFO, hopefully before this, you've established yourself as a business partner and you are involved in managing the business. There are controllers out there who view their job as to close the books. But I'm hoping we're getting beyond that on the corporate side, that the really forward-thinking controllers are the ones who are partners. The forward-thinking CFOs are business partners. They're strategic partners to the CEO. So I'm thinking they were doing that anyway. Now, their world was upended because they were in a crisis management point of view. So I think that last year was crisis management. How do we get creative? I had an experience once in a short departure from the Illinois CPA Society where we were trying to save a business. And saving a business it's a whole different mentality. You think sharp, you're on edge. Your mind is just rushing every minute when you're helping to save a business. So I think from that perspective, it was different. The advice they were giving, I'm sure some stepped up, but I'm sure that hopefully they were already being viewed that way.
Now, Tom, what would you add, and what's been your point of view and perspective?
I think from my perspective, what I saw the pandemic was really a forced innovation trigger. And really it pushed in the public accounting sphere, pushed folks to really think outside the box in terms of how to communicate with each other, how to communicate with their clients, how to provide that service while at the same time dealing with the stresses of a global pandemic, and I think recognizing that. And I think it has this ongoing, I agree with Todd, it's not done yet. We're still kind of in the middle of it. And it has, this underlying challenge of it kind of pushed people, so businesses to kind of rethink the way they were delivering. But I think it also created this space for individuals to think about what do they want to do with their careers, with their lives, how they work, how all of that gets integrated together. And so I think there was a lot of soul searching going on, and now employers and employees are kind of working together to figure out what's that right mix and balance going forward.
Yeah. Todd, you mentioned the workplace expectations, and again, it has two sides of that coin, the employers as well as the employees. How has that shifted? And I mean, do we think maybe some of these shifts are here to stay, or maybe too soon to tell? What do you think?
I think it's too soon to tell.
Okay.
Again, I really serious when I say, Peter Drucker would have gone, what? and again, some of the listeners are going to go, who is Peter Drucker? Obviously, one of the management gurus of all time. I don't think the book is finished. Such a dramatic change in the workforce, and it's very interesting because it's not the same everywhere. We have this view that everybody is working remote. I was talking with a firm yesterday, and they're 100% voluntary. Anybody can do exactly what they want. They can come in the office. They never have to come in. The only time they have to do anything is if a client wants them out on the site, and you can even say, I really don't want to go on site for the client. But I've heard of situations where somebody in public accounting side said at the end of the year, they said, well, they got hired by a firm, and they were told it's a voluntary. You don't have to go in. And at the year end, they were told they had to do inventory. I said, well, no, I was told I don't have to go in. It's creating some tension, but it really isn't everywhere. If you go down to central Illinois, for instance, most of those firms never stop coming in. Mm-hmm. So it's sort of a little bit of urban, large city, but it's broad. Mm-hmm. So it's not the same everywhere. Do I think this is permanent? Yes. Some version, the workforce has changed. But are we going to be in a fully remote workforce forever? And I think there's implications that we haven't even thought about. A firm I was talking to a couple of days ago, they said, well, we now have they're 100% voluntary. It's a large mid-sized firm. And they said, we're 100% voluntary. So we've got an employee in Kentucky, we've got employees here, we've started recruiting employees all over the country. What's the impact on the culture of that? How are they going to advance in the company? We don't know that. I've heard countless people say, I'm more efficient when I'm at home. And when you ask somebody why, they'll say, well, I don't get interrupted. And you say, can you define what job is? Is job just getting a task done? Or is part of your job getting interrupted? And I think that's one of the challenges that we face. My concern is that we've sort of created this isolationist workforce. You sit at home by yourself doing tasks. And it's not just the accounting profession. But we sit at home isolated doing tasks. So we're an isolationist workforce, a task-based, because not talking to people unless I have to. And what's your connection to your employer?
Right.
If I would live in Kentucky and I work for a firm, well, heck, I could work a firm in Chicago and I never see anybody. I could work for anybody. I can. Is my employer going to become really just nothing more than a transaction to me? So I'm concerned that that's happening. I don't know what the long-term impact on culture is going to be. I can tell you, in our office, we have people in 2 days a week. We're taking a break right now. But we have people in 2 days a week, And you could feel the difference when people actually were talking to each other.
There's the perspective of maybe those that are coming into the profession or that are newer to the profession that have kind of really only lived in this environment maybe, or is that regional as well, what the expectation of the worker is, whether they'd be coming in or they'd be working remote?
I have heard stories about people who feel very disconnected when they're sitting at home.
Yeah.
So, and especially imagine if you started a job and now it's the new world. It's never going to go back. And we will learn to adapt, but to think it won't have some impact on the culture of an organization.
Yeah.
And maybe that's good. Maybe it's not.
Yeah.
I think time will tell.
Okay.
Yeah, I mean, I think you've got when you have that sort of shock to the system, it pushes things way out of balance initially. And then it takes time to kind of settle back in. I think it's interesting, people ask me, hey, can you generalize to, is it one group versus another group of employees that want to work from home or don't want to work from home? And I really can't. It really comes down to an individual preference. What does the work setup look like at home? What are your personal preferences in the way you approach your work?
Yeah.
What sort of relationships are you trying to build within your work? How do you treat it? To Todd's point, is it a task or are you like building something together? And we've also seen it with students who had to go full remote learning and didn't really like it and were really itching to get into the office to experience what it means to be part of an organization. So I think the long term is, the demise of the office, I think is a little overstated at this point. I think it might get reshaped in the way it's set up and how often folks are in. Are the days of, 6 days a week in the heart of the busiest time of year being in the office, that's probably gone. And it's not necessarily a bad thing. There is a qualitative difference, especially if you're in an urban environment, to be able to kind of cut out commute time and that sort of thing and maybe get a little bit more of that, be able to convert some of that into more recharge, energy producing time for you. But there's also something lost there because bonds are forged through crisis and through those strenuous times. And when you've been, if you've gone through kind of like these really intense times at work together as a team, that creates a different sort of bond. And so it creates a challenge. I mean, we just have to figure out ways to keep those connections alive. Technology is great. I mean, it was amazing that we were able to do what we did over the last couple of years. It is second best. I think most people that I talk to say it's great that it's a tool that we can utilize, but it doesn't match in terms of relationship building. It doesn't match that interpersonal connection that you get by being together in the same place.
The other thing which is kind of interesting is we always, the older generation, and I'm going to date myself now, the older generation of which I am, love to blame everything on the younger generation. The world's ills are all because the younger generation, they don't work hard, they don't do this, they don't do that, do the next thing. Right?
Right.
None of them want to come in the office. I'm not so sure that's always the case. I think there's a lot of times now where older individuals really are leading that charge because, they've trudged in the office and they go, oh, yeah, that's great. I don't have to get up. I don't have to come. And both, when I'm at home, none of these young kids bother me. So let's not blame the young people. It was a Big Four firm actually surveyed their employees and they were asked if they wanted to be remote or hybrid. And you kind of had to pick one or the other. And an amazingly small number for their Chicago office chose to be fully remote. I mean, less than 20%. So that says, I think we, and I say we by leadership, we are making an assumption. We are scared. We're so scared because we all need people. So we're like, if I tell my staff they got to come in a couple days a week, they're literally all going to walk in and quit within 5 minutes. And there's this fear. And this is a time for leadership. And in one sense, this is going to be controversial. I'm not so sure that we aren't, and this is, again, not the accounting, this is broadly speaking, that management is abdicating leadership. We're so scared to keep people that we abdicate leadership because people want leadership. That's when leaders lead in crisis. And I'm not so sure we're not abdicating to a point leadership, just saying whatever. I don't want to be controversial, so whatever. Leadership is never easy. Leadership can be controversial, and it's hard. And I'm not so sure that we're not doing that. That's a new one. I haven't thrown that
No.
in front of you.
Yeah.
But it's a good perspective. Yeah. Because what I'm hearing you both say is there's no one size fits all. So you kind of have to navigate it, and then you have to lead through that. Right?
Yeah, and I think it's helping people see what is the bigger picture, what is the work you're doing. And I would say our teams, what I can see from our office and the firm as a whole, really hardworking, like amazingly flexible and adaptable and committed, and really working to serve each other and serve clients. And so, yeah, from a leadership perspective, it's then, okay, now how do you kind of tap into that desire to grow as a professional and coach them along that path?
Well, and the strangest part of that leadership piece and saying abdicating leadership, I know that is an inflammatory statement, but let's call it what it is, right?
Yeah.
There are more offices, you hear this in every office all the time. Well, it's 100% voluntary. So then you say, staff, well, but no one comes in. And you've talked to the staff go, well, I'd go in if there were people there, but when I go in, there's no one there. So you have a cat chasing its tail. Mm-hmm. I'd go in, but there's no one there. So I don't go in because there's no one there. So then no one goes in because no one's there.
No one's there. Yeah.
In our office, we have people come in 2 days a week. Well, they get to choose the two, but they come in too. And that's leadership. They can't, and guess what? When people come in 2 days a week, there's people there. So you create this cat chasing its tail. And then you say, well, we let people do what they want. They don't want to come in. Well, then you talk to people, I come in, but it's again, what's leadership? What's our role?
You touched on the fear of losing people and wanting to keep people. And I know there's been this trend that we've seen, and it's not like, I guess maybe the first time there's ever been a trend downward in the CPA profession, but the number of new CPAs is down. Todd, can you maybe talk about that? And I know the Illinois CPA Society has done some studying around that and a poll around that. What's going on there, and what's your take on it?
When you say new CPAs are down, the specific thing that we look at, and it's a leading indicator, is the first-time exam takers. And we saw a steady increase. If you looked at a chart, you would have seen two things. One, a steady decrease of exam takers. You said it's not the first time. There was a steady decrease of first-time exam takers in the 90s.
Okay.
And really, if you go back and look at what drove that, the tech boom. To your point, debits and credits, some people may not think that's exciting. Some people do think it's exciting. But in the 90s, salaries were up if you went to the tech industry. It was exciting. It was changing. So people really were moving away from this profession. And if you look, first-time exam takers sort of had a steady decline from 1992 till about 2002. Things turned around in 2002. We fixed the profession. We made it exciting, and people started flooding back in. I'm just saying that's not really true. What happened in 2002, well, two things happened. One, tech boom went bust. So if you wanted to work in tech, good luck, because most of them were gone. Uh-huh. And two, Sarbanes-Oxley was passed, which drove up salaries and hiring, and all of a sudden created demand. So you saw the steady increase of first-time exam takers from 2002 to about 2011, flatten out from 12 to 16, from 12 to 16 with some bumps here and there. All of a sudden, in 2018, the number dropped to 2006 levels. And 2019 is still at that same level. 2020 is going to be bad because testing centers were closed and such and so forth. So yes, so we actually, to your point, we actually did a survey. So that's the data. That was an alarm for us at the Illinois CPA Society. It should have been an alarm for everybody in the profession, but it truly was an alarm for us. Not a lot was being discussed on that, as Tom knows. He was on our board. So we actually launched a project, a pipeline project. We surveyed over 3,100 students and young professionals. When I go out and talk with firms and companies, both, Tom's heard the same thing. We all know why people aren't sent for the CPA exam. There's no question. It is because of the 150-hour rule. That is no question. I will talk to rooms of CPAs, and they tell me that's a fact. Now, if you ask them why that's a fact, they go, it is because I know. Because it is. Because that's the fact.
It's a little circular there, Todd.
Well, there's no question about this.
Yeah.
It is. It is. I know it. Mm-hmm. I know it to be true.
Okay.
Well, by the way, the 250-hour came into law in around 1999, 2001. It became law in Illinois in 2001. Most states, it became law around the same time. Remember what I said about that steady increase throughout the first decade of this millennium?
Yeah.
Huh. Well, I'm not sure.
It didn't quite match the data there, Todd.
It doesn't quite match the data. So we asked people, do you even make the top 4 reasons, 150 hours? What really, the reason people aren't pursuing it, one, of all the people we've talked to, those who were CPAs, those who were not CPAs and never planned to become a CPA, never planned to sit or sat for the exam and didn't plan to finish, only about 25% saw themselves having a career in public accounting for more than 3 years. So if you don't see yourself having a career in public accounting, and by the way, less than 50% of accounting graduates now are even sitting for the exam. Well, if you don't see yourself having that career path, then the time it takes, and time was the number one reason that people weren't pursuing it. It was a time to study. It was a time to do it. It's interesting. If I had to put one of the challenges with the CPA exam, I tell you, the computerized exam probably had far more impact than 150 hours. Because back in the day, I'll date myself now, back when Tom took the exam.
That's right. Me too.
Not when you took it, but back when Tom,
you took it right immediately after they moved to
computerized
the
exam.
computer exam.
So here's the difference. When Tom took the exam, it was given twice a year.
Yeah.
It's given in November and May. That was it, right? And firms knew that. Companies knew that, right? So you try, and I think a lot of firms try to give people time to study, but let's be real. The exam is given around over 300, probably 360 days of the year. I mean, they have off for certain holidays, but it's given, even on Sunday, you can take the exam in a lot of places.
Yeah.
So that now when you get to study, the firm will try to help you, but a lot of it's on OT, own time, not overtime, own time. So that really came back as the number one reason. Relevance came back. I don't see the ROI. I don't plan on being in public accounting. The three words I most associate with CPA were accounting, audit, and tax. That told us we have somewhat of a brand perception issue as well as a time management issue. We published this, and it's called the Pipeline Report, Decoding the Decline, that talks about all the findings from those individuals. I will have to say, I was talking to a CPA, a friend of mine in Kentucky, managing partner of a good-sized firm in Kentucky, and after talking about this and sharing the results, he set me straight. He said, I don't care what your study said, it's 150 hours. And I went, well, okay, that's good. That's good. I'm glad what the people told us is they don't know what they know.
And I would say anecdotally, I mean, I've talked to students, some family members or students, and their friends that are in accounting, and they echo the sentiment, especially maybe at larger, top tier accounting programs. A lot of those students come in with credits. So getting the 150 is not an additive cost to them. They still finish up in 4 years. And so it doesn't add that extra level of barrier. And I think for the fact that it has been, it going in. If you decide to go into public accounting, if you decide to go into accounting and you think you're going to pursue a CPA, a credential, everybody knows from the moment you start school that it's a 150-hour requirement. So they're self-selecting into that program if they're on that path. I think it's really interesting to see that the way it shaped out, to say that it's really this time and relevance as being a bigger driver.
You go back to the 90s when we saw a decline because the economy was very strong in the 90s. Well, then think about what drove that increase of CPA candidates in the first part of this millennium, from 2000 to 2010. What drove it? Well, let's be, if we want to be real, it was Sarbanes-Oxley. Firms were hiring, salaries were going up. Mm-hmm. Well, in the same study, the AICPA is where they do a trends report, which is where we saw the first-time exam takers. Between 2014 and 2018, there was a 30% drop in hiring of accounting majors by accounting firms. There was no drop in hiring. According to their trends report, there was a 30% drop in accounting majors by accounting firms. So guess what happened to salaries from 2010 to 2020? They didn't go down. They didn't go up.
They didn't go up.
Because why would you take salaries up if we don't need as many people?
Right.
Technology, offshoring, all those things came into play.
The pressures. Yeah.
So you had this. If you look at what drove the increase in the first part of from 01 to 2010, what drove the increase? Well, that didn't replicate itself in 2011 and on. Business did very well in the 90s. That's why you went into tech, because there were other opportunities. Well, business, we can try to say the economy is terrible, but the Dow Jones and the S&P would say business really isn't that bad right now. Business is pretty good. People are hiring. So the question is, what's the perception of the brand? What's the perception of the work?
And I don't know, because Todd had mentioned relevance. So Tom, I don't know what your What's your take on that? Or what are you seeing kind of around the relevance of the profession and the credential?
I think people coming into the profession want to make a difference, and I think they want to really understand, have interactions with their clients. They're not looking to just fill out checklists or fill out forms. They want to have that interaction. They want to understand the business of their clients, and so that relevance piece comes into how do you help that first year associate get connected with the client and understand what their work does to impact that client. Todd and I have had a lot of conversations around, like, how do you encourage that? How do you ask that question and say, hey, as you're working through this, try to think of one thing that might add value for the client or might add value for our group, for the team. Are there ways that we can do that, do the work that's not the same as last year that makes it better, either for the experience for the team that's working on it, or do we come up with an idea for the client that makes a difference for them? And helping them kind of see themselves, and a big part of our roadshow is talking about being a strategic advisor, helping a young CPA see how they can leverage their education, the trust that the credential basically has in the marketplace, and then use that to really drive meaningful, additive, consultative, and experiences with their clients. I think that is a way that we who are in the profession now can help continue to drive that relevance forward. And it's really on us to make it interesting and exciting and engaging for the students and for the young professionals coming in.
And businesses want that. I don't know if businesses do or don't. I think some do and some don't. We were in a meeting where Alan Colton, a leading consultant in the profession, said he talked to clients, talked to businesses, and said, what do you want out of your CPA firm? And they said, I want coaching. And they didn't mean management coaching. They meant, how can you help me become more profitable, more successful? That's the strategic advice. Now there will be firms going, well, they will never pay for it. Well, if you walk into Walmart, you're going to buy. They have the loss leaders. You give it's 99 cents for something. If we got to be paid for every single piece of advice we give, never going to be successful. But if you give businesses that insight, one, it makes it more exciting. Now, I will tell you, I think the challenge we have is it's harder for young staff to learn that skill than it ever was. To pass the CPA exam, they don't test strategic thinking. You can, they don't. But think about that when you come into the workplace and you're a young staff person now, right? Your tax return is basically, to prepare a lot of the tax return, you're scanning documents in. I mean, literally, you don't even enter. You don't have to make sense of it now. You scan it in, and the software is phenomenal. The technology has been so helpful in making things easy that it's in the audit side. It's people go, I hear this all the time. It's a checklist. Check the box, check the box, check the box, check the box. Clean opinion. So, and the technology is changing there too. So technology is actually making it easier not to be a strategic thinker if we don't proactively do it.
I guess knowing all of our data here now, what do we do about it, Todd? What is the takeaway here? What's the move forward?
When you talk to more progressive firms, this is not a large firm, small firm thing. I mean, you look at the largest firms, and they talk all the time. So they're not accounting firms. They're consulting firms. They talk about themselves as being professional service firms. But even some of the more progressive mid-sized firms are starting to think about this. When I've talked to some mid-sized managing partners, I'll say this, that we need to be strategic. We have a saying, we're the Illinois CPA Society, but we're actually trying to rebrand the profession. And Tom and I did our town halls, and I would always say, the most trusted advisor. What an amazing thing. We want to be the most trusted advisor. When you ask people what trusted means, they give you great answers. But every single time they say, when a client has a question, they call me. They say, and Tom's heard me ask this, when they have a question, they call me. They really believe what I tell them. They know what I'm telling them is going to be right. And that's great, but that's reactive. It's when the client calls me and they have a question. And then I say, what does strategic advisor mean? What does strategic thinking mean? And almost every time, somebody comes up with some form or fashion of forward thinking, proactive. So we actually believe that we need to move from the most trusted advisor to the most trusted and strategic advisor.
Yeah.
And literally, now we have to train people. When I've talked to some firms, they go, that sounds good, but my staff don't know how to do that. because it's not just intuitive. You can teach people to think strategically. You can teach people to do this. So how do we proactively do this? So what are we doing about it? We're literally trying to rebrand the profession a brick at a time. And people are listening. Even our counterparts at the ICPA. I was in a presentation with the CEO of the ICPA the other day, and he said, public accounting firms need to start being more strategic thinkers. So people are starting to say it. Now we got to train people. We got to make sure they can do it. And then we actually have to do it. Because, a friend of mine, another accounting consultant, said the biggest reason a lot of accounting firms will go, yes, whatever, I don't care. You can do very well. You can make a whole lot of money in this profession, in public accounting, by doing compliance services. So why should I change if I'm making all kinds of money just doing the same stuff I'm doing now? And that's, by the way, you could say, well, that's probably the small firm of 5 people or 3 people, they're doing that, right? But, you get a larger firm. You think all the partners are on board with this? There's a lot of partners in that firm that are going, I'm making all kinds of money. Why should I do anything different than what I'm doing? Just give me another audit. Give me another tax return. Give me another audit. Give me another tax prep because I make money. It's a volume business, baby. It's a volume business. So how do you change that mindset? You change it from the top.
So Tom, as you're trying to cross over that hurdle and make it more strategic, how have you, in your role as the regional tax director at BKD and office leader, how are you trying to implement that?
Some of the things that we're doing can be done. There's some process things that can be done internally. And so what we're trying to do, as opposed to just like, hey, it's another return and we're just like on an assembly line kicking them out, we're really trying to define each project with a beginning, middle, and an end. And that beginning, everybody on the team needs to understand what are the key issues, what are the key facts, what's going on with this client, and what are we looking for. So we're calling them kickoff calls to have that really, kind of flag marker to say we're starting something here and we want everybody to understand what's going on. And we also have, from an automation perspective, we've made a lot of investments in technology to take advantage of that automation. What that then means is we need to make almost an equal investment in training so that folks understand what that automated information coming out means and what can they do with it. Because while the computers are great, they're not perfect. And sometimes you need to be able to step back, look at it like, that result just doesn't make any sense based on what I know about the tax law, based on what I know about these financial statements, based on what I know about this company, and be able to then do something with that. Or maybe it does make sense, but you know enough about the rules that we could probably do something different. Maybe it's a different accounting method or some other credit that's out there that could lead to a different result. And so another thing that we're trying to have really direct conversations with our team members. We are scheduling kind of a group get together to talk about the Simon Sinek idea. Start with why. Why are we here? It's a tough sell just to say you're here just to prepare a tax return. Like that's generally not going to get most people out of bed in the morning. And so you got to think about your own personal why, and then help kind of coach the newer professionals coming in to develop a sense of what are the things that motivate them and how can they do that within the framework of public accounting. It's time, it's investment, it's training, it's involving them in conversations with the clients. That was something that we added. And actually, kind of a plug back to the technology, a way that the technology has helped is it's allowed more people to remote into a meeting, maybe just to listen in, hear how the conversation's going. Maybe it's a way to bring in, we're at a fairly large firm, so we've got specialists across the country. Well, maybe this is a way to tap into the resources that the firm has more broadly, and do it in a cost-effective way for our clients, and then also for our younger professionals to be able to hear and listen and participate and see kind of the breadth and depth of what the organization has to offer. So I guess what it just comes back to us. Like if we're just sitting in our offices cranking out tax returns or cranking out audit reports, I don't know that that's a great marketing tool for the profession and for the folks coming up through the organization.
It's interesting. You mentioned something, and I say this all the time because I consider myself to be at my core an analyst. I said data, my core, I'm an analyst. And we don't think about that one word. And I've talked to some people have said to me, so what do you mean? What does it mean to be an analyst? I go, well, the most important part of being an analyst, and we don't do this enough, is the word you just said. It's the word that you learn. It's one of the first words you learn, and it's one of the most annoying words you ever learn, and it's why. And we don't ask why. We don't peel the onion. We just listen to the answer and then we move on. I learned that when my second job out of college at Zenith Electronics, when I did something and basically it was rote and I was asked, does this make sense? And I was like, oh, it doesn't. And I was told, you're better than this. And that why is critical. We don't ask why enough. We don't try to think of ourselves as the client. What's important to the client? When you think about most clients, what's important? They want to become more profitable, more successful. It's not just, we want to minimize their tax liability, but guess what? In most businesses, their big success isn't going to be minimizing their tax liability. Most businesses become very successful by growing their revenues or reducing their expenses, of which tax liability would be one, but only one. There's a lot of other expenses. Tom said, what are we doing about this? And I talked about rebranding. We put our money, I'm not plugging this, but we put our money where our mouth is. We actually developed an academy, a strategy academy, where we bring people in and we teach them how to think strategically, how to look for this stuff. We talk about value drivers. Now, I'm going to guess you're going to go to most accounting classes and you're not going to hear a lot about value drivers. But value drivers, you talk to a business, and a business may not know what a value driver is by that term, but they know what value drivers are. If you're doing the audit, don't tell me that I have old receivables. I know that. But if my DSO's changed over the last 3 or 4 years, that's a value driver. Have my margins? That's a value driver. So we're teaching value drivers. Again, a concept that isn't broadly talked about.
No, I don't think that was brought up in my accounting classes at all.
But think about it, but put yourself in the business owner.
Yeah.
It's all about value drivers.
Exactly. Yeah.
100%.
Yeah, and how do you tie into what's going on in the economy to get people thinking about where their role in the whole stream makes a difference? And we were talking with one of our partners, Andrew Clemens, as he was going into his year-end meeting, said, "Hey, we're in an inflationary economy. We hear this all the time, every day on the news: inflation, inflation, inflation." Well, hey, if I know about inflation and I know that there's a tax play in inventory that benefits when there's inflation, it's called LIFO.
Now, as Tom just alluded to, during inflationary periods, companies may consider accounting for inventories using the last in, first out, or LIFO method, rather than the more conventional first in, first out, or FIFO method, as it results in a higher cost of sales, and therefore a lower overall taxable income. It's important to note, however, that the Internal Revenue Code Section 472C conformity rules require taxpayers who apply LIFO for tax purposes to also apply it for financial reporting under U.S. Generally Accepted Accounting Principles, or GAAP, which can present challenges for companies looking to capitalize on the LIFO tax incentive. I've learned a great deal from working with Tom over the years on implementing LIFO, and I'm sure he would be happy to share his knowledge with you as well. You can find Tom's contact info in the show notes of this episode, as well as the contact info from my colleague and true life of the party, or at least that's what his sticker says on his laptop, Andrew Clemens.
Maybe that's a conversation we should be having with our clients if they're not already on LIFO. And he brought that up to a client and it was able to result in a tax saving. So, if you're part of the team that's thinking about that and bringing that news to your client at the end of the year, that's going to feel really good. You're going to feel like you just, kind of hit it out of the park. But it takes kind of tying not just a knowledge of tax law, but an awareness of what's going on in the market. And awareness is, hey, is this a client that actually it even benefits from it? Depends on what type of inventory they have. So you have to know about the client, you have to know about the market, and you have to know about the law, and you've got to tie all those things together. And that's really, I think what makes the profession exciting from a tax perspective. And that's the type of thing that we can talk about and celebrate within the group to get people energized and excited about it.
Go to young staff and say, you're not just doing it, you're actually helping Main Street businesses become more successful. You're helping them achieve their dreams. You mentioned earlier the corporate people and CPAs in the corporate side, right? Well, a good CFO in the corporate side isn't close in the books. When I worked in the corporate side, what made me successful wasn't that I could put together a budget, a bunch of numbers. It was that I could analyze and give advice on the value drivers behind the business. What's going on? How do we become more successful? You can do that. And people go, well, in public accounting, that's called advisory services. No, it's not limited to that. You can do that if you work on the audit side. You can do that if you work on the tax side. You can bring that perspective. It's more exciting. It's more valuable. But sometimes, clients may not pay for it directly. Well, but the stickiness is there. You help a client become more successful. And let me tell you, now, if you help them become more successful and you say, give me money for it, you sound greedy. But if you help them become more successful, there's a stickiness there that will never go away.
You made the comment that it's a hard skill set to cultivate, right? To have that strategic thinking. And so if you're someone maybe that's starting out or they're in school right now and they they hear the story about the Andrew Clemens that put these two things together and with strategic thinking, you mentioned the strategic academy, things like that. What can you do to kind of develop that strategic mindset? And I won't limit it to those coming into the profession. Those are like myself in my chair. How do you become more strategic if you aren't currently?
I'll give you an example. Tom has his MBA. The vast majority of CPAs don't have MBAs. And if you ask them, well, why wouldn't you get an MBA? They'd say, why do I need it? Why do I need it? Well, because that's how you run a business. So, you can do formal things. We're actually going through a methodology that teach people when you go and do it, when you're doing an audit, when you're doing a tax return, do these things and identify these things. What else can you do to try to become more strategic? Read. Think about but most importantly, and you'll say this, I know you'll echo this, is think about yourself not as the CPA providers. Think about yourself in the client. Think about yourself as the client. Think about, if I'm the client, what's important to me? For every single client, what's important to me? And then start acting on that. That's not hard.
Yeah, I would echo that, and I would say, you got to get curious. I mean, at the end of the day, you've got to be interested in your clients. You got to be interested in the work. When you're in the tax world, the laws are changing regularly, as we've seen, maybe a little too often for our comfort levels lately. But you've got to have that interest to do that and invest that time. Todd talked a little bit about you're giving some of that advice away in a sense, like being curious about your clients and spending time with them can lead to those conversations. So then it gets to, as you're thinking about your time, how do you prioritize your day? How do you prioritize your week? Are you carving time out to, in those moments? If you're a young professional kind of coming up through the ranks, ask to be invited. There is no shame in that. That sort of initiative. Because sometimes, people do get busy and maybe they're not always thinking about, all right, well, how do I, who should I bring into this meeting on every single meeting? But if you've got an interest in a client or you've got an interest in an area or you saw a training session or a podcast or a book or whatever, listen to it, read it, attend it, share it with your team. There's an energy that comes from, everybody kind of like trying to move together in that direction.
I have to echo the curiosity. Some people aren't going to do that on their own. So part of our job is to demand it. Because you just won't. Again, when I go back to that experience I had at Zenith Electronics, again, I'm dating myself, Zenith Electronics, and I did this analysis of the monthly results, right? And I presented my director, and he goes, this doesn't make any sense. And I went, ooh, you're right. Well, he demanded that I was curious. He demanded it from me. So, you think about that, and I think we have to demand it. We have to tell people that's the expectation. That's the expectation. When I worked at Quaker, I would go out to the plants once in a while. And I really didn't have to know that much about manufacturing processes, right? But I was curious. So when I would do a plant tour, it would take 2 hours for me to do a plant tour because I would really be wanting to know everything about everything. To the point where one day they came up to me and they said, would you like to move into industrial engineering? Well, why? Because that curiosity was got it. Some people will do it naturally, but you can say, my expectation is, talk to me about this client. What does this client do? What do they make? How do they make money? For every tax preparation engagement, if you said, how does this client make their money? And if your staff come back and go, by saving taxes, then you're going to go, okay, you've got a lot to learn. Because no client makes most of their money by saving taxes.
Right.
No client makes most of the money by getting an audit and a bank loan. How does the client make money? What's important to this client? And if you had that conversation before every engagement, you'd have staff going, most times they'd go, I don't know. Well, think about it. Because why shouldn't you really understand everything about that client? What's important to them?
That's great. And you talk about what's going to motivate you and make you want to be a CPA. I mean, the things that excite me about being a CPA and drove me and get me out of bed every morning are those things. But you're right. If you're not intentional about it, sometimes you can fall back into, even if you are the most curious person asking why every day, you sometimes fall back into
the barrier to that is time.
Yeah.
When we did our first strategy academy and we went through this whole concept of value drivers, what came back was, it's nice, but I don't have time because I go from this engagement, whether it's tax or audit or accounting, I go from this engagement. The minute that engagement's done, what do? I go to the next engagement and the next engagement. And by the way, what do? We respond to RFPs for another engagement. Mm-hmm. More of the same.
Yep.
So time is the biggest, time and not being intentional are the biggest barriers to achieve success.
So how do you, so we talked about the intentional part, perhaps the time part. I'll tell you my perspective. There's no silver bullet there. You've kind of just got to figure it out. But any tips from either of you?
So it's funny. I talked about podcasts. I was actually just listening to one this week, and it was basically talking about this tension in the workplace of either having too many people and not enough work, or too much work and not enough people. And you pretty much, if you looked at businesses throughout history, it's usually that latter is the one that they land on, that there's too much work and not enough people. And what does that mean is that as you grow in your careers, you will never have enough time. Like you can never, there's always more to do. And so it becomes very much a point of focusing on the priorities. And what you prioritize on a day-to-day, week-to-week basis and schedule are the things that are going to get done. And then being discerning in the things that you let go of, that you don't need to do. Because we do have limited capacity for time. I mean, some people need a little more sleep, myself, than others. You have that piece, but it really does, it's a focus. Where do you want to put your energies? And there's no other way to just say, well, there's just somehow I'm going to magically get into a spot where I've always got this excess time to do, whatever I need to do. You've got to carve it out and make that the priority of how you're going to spend your time.
The sad truth is partners are very well compensated in most firms, especially larger firms. And yes, it means maybe you're going to not submit a response to an RFP because you're going to spend more time on your existing clients that long term will benefit you, but short term. We always talk about the challenge in publicly held companies is they're always going quarter to quarter to quarter to quarter to quarter, increase in results, increase in revenue, increase in revenue. Don't we think about that the same way in a lot of our professions? I actually heard, again, somebody say the other day that there's going to be a lot of pressure on firms this year because they're going to want to make more money. Partners are going to make more money this year in 2022 than they did in 2021. Well, part of the reason they made more money in 2021 was because they may have had a PPP loan. They were doing all this other work, killing themselves by doing it. So that part of it was just a PPP loan or ERTC that they were able to take advantage of, right?
Right.
And they're going to want to make more money. So part of it gets into what's important. You've got to balance the money with the job satisfaction and what's going to excite young people who are going to come in behind you.
Building a profession. Yeah. A topic that's kind of related in here because you have diversity of thought and perspective, I think probably also comes into this curiosity, right? So I feel like as we talk about the profession and the state of the profession, and I know both of you are very driven by that and some of the trends there. So maybe Todd, I'll start with you. Where do things stand from a diversity, equity, and inclusion perspective, and what's the road ahead?
There's no question that we have made progress. I mean, actually 2021, as Tom knows, was an important year because it was the centennial of the first Black person becoming a CPA, John Cromwell, in the state of New Hampshire in 1921. We've made progress. It took 45 years from the first Black person in 1921 becoming a CPA to the 100th person becoming a CPA. It wasn't for lack of people wanting to be CPAs. It was because no one would hire them. They wouldn't give them the experience. We've come beyond that. We've made progress. But there is miles and roads to go. Again, it comes to intentionality, but it also comes to a different perspective. So two things I believe, while we've made progress, if you still look, people of diverse backgrounds are significantly underrepresented in the profession, significantly versus the general population. And you start to break that down, go into the data. one of the things that I did when I became CEO is I said, I need to see some data. So show me the college data. Or do we have people? Where's the problem? So you'll hear two schools of thought. You'll hear people say, well, we need to be more inclusive. But we're more inclusive, and we need to be more inclusive. But if we're more inclusive, then we'll attract people to the profession. Well, but you also have a pipeline. If you look at college majors in the state of Illinois, if you look at Black and Hispanic individuals, they're far underrepresented versus the population in majors in accounting. So you got to then say, well, then there's a pipeline problem. I said in the AICPA's National Commission on Diversity and Inclusion, they're now starting to talk about that. We need to go to diverse high schools and start talking to individuals about this career. It's the best kept secret in the world. It's the best kept secret in the world. Because a lot of people become CPAs because they knew one was doing it. They knew a family member was CPA. They may have heard about it in high school. Well, if you grow up in some of the neighborhoods of more diverse, you don't know people who are CPAs. So first, I think we need to build the pipeline, and we are focused on that. It has been tough because we're out there competing with a lot of other professions to get people to become accounting majors, go to college and focus on it. But then we also need to be more than just inclusive. Once we get it, it's great to have a business resource group for people to talk, but are we giving people the support they need to have? One of the things actually that we're going to be talking a lot over the next year is we are seeing, we need to get more data behind this, that even those individuals who are of diverse backgrounds tend not to be successful when they get to the firm. Now, some people say, well, it's because they don't get the best assignments. On the other hand, if you really get down to the core of that, why aren't they getting the best assignments? Is it an inclusive issue? Or are there other things underlying there? And one of the challenges we are seeing is when you go to a lot of firms, if you're going to recruit people who have diverse backgrounds, they say, well, you have to expand the schools you look at. You can't look at University of Illinois, University of Texas, BYU, Notre Dame, Michigan, Indiana, the accounting, as I call them, accounting factories. The reality is a large percentage of white individuals go to those schools and they get hired in the firms. I always laugh. You go to some firms, they recruit heavily in those schools, and you have to have a 3.5 GPA even to get considered. So you go to the best accounting school, and then you have to have a 3.5 GPA to get hired. But then what we do is we go to alternative schools to find individuals with diverse backgrounds. It's important, right? But then we bring them in. We say, well, here's 3 or 4 of you. We're going to throw you into the pool with all of the 3.5 GPAs, 3.8 GPAs, the best students in the school from the toughest accounting schools in the country. Good luck. And then you have a partner going, well, I don't want this person on my assignment. And is it inclusive? Are there issues? Do we need to provide greater support to those individuals and not just maybe engagement? They didn't get the same college education that the others got necessarily. It's not their fault. So what can we do to help? So we're very focused on the pipeline, getting people internships, and we're really going to start focusing over the next year on how we can help foster success once they are in the workplace.
The great work that the CPA Society has done. Lester McKeever seeded a foundation, scholarship foundation called the Mary T. Washington Wiley Foundation, and it's grown over the years. I think it just crossed over the $1 million mark in terms of total contributions, and so there's a lot of support from the community in that. And it's more than just the dollars. Every year, somewhere between 20 and 30 students are being brought in. They're given coaching on resume writing and interview skills, and ultimately getting internship offers. And that's something that we as members of the profession can participate in at whatever level, whether that's monetarily or whether it's volunteering to participate in the programs or to actually, if you've got internship slots to offer, to participate in that way. And I think it is important to recognize if you make diversity, equity, and inclusion a priority, then you've got to be serious about it. And you have to recognize that if someone is coming from a different background than you, it may not just be the education that's different. Their entire family structure might be different. There may be multi-generational living arrangements that are more prevalent in certain communities than others. And what sort of impact does that then have on the way that they participate in the workplace. And I think we saw a little bit of that pandemic highlighted that a little bit in terms of you got a little bit of a peek into people's home lives and what that impact might look like. And so if you're really serious about it, you've got to think about that as well. And that, time, investment, energy, it's much more active, much more intentional. You can't just passively rely on the fact that this person got a stamp of approval from a certain school and therefore they're ready to go. And over time you make those investments. I do absolutely feel that that's better for everybody, not only just for your own office, but for the community and the overall economy.
Well, we've covered a lot of ground here, guys. And honestly, I feel like we could probably go on for the better part of the day, if the time would permit, speaking of that word time. But maybe just some closing thoughts. Todd, I'll start with you on the profession, kind of what's on your mind, what you're thinking as we look forward to the year and years ahead.
I was asked this the other day, what's the most important issue that the profession's facing going forward? And I said relevance. I truly believe technology, and I know there's others who will say, we've been through the technology. I was here when Excel came in, blah, 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 blah. I just, again, I'm going to date myself because it's people like me that say this. I think relevance is going to be the number one thing we have to deal with because the world is changing fast, and how do we stay relevant? Technology is changing fast, and how do we stay relevant? The workforce issues are critical, and they will continue to be critical, but ultimately, we've got to show our mettle as a profession by relevance, and I think that's going to be the biggest challenge we have in an ever-changing world. And the more we do that, the more successful we'll be.
Well said. Tom, how about on your end?
I would just encourage people to think about the relationships that they're developing. At the end of the day, if you look back on your career, what are really going to be the important aspects of that, the milestones that you've met. When I look back on my career to date, it's really the relationships I've developed with my coworkers, lifelong friendships, as well as with clients. And thinking about your work more broadly in terms of getting beyond the task, but thinking about that side of it and how does that then play into the way in which you interact. So if we've demonstrated a flexibility and a nimbleness and an adaptability that perhaps we didn't even realize we had, that's going to continue to go on. And I say that not only for the young professionals who are coming in, just starting their careers, but for the midterm and the senior executives too, to think about what influence can you have on that next generation that's coming up? How are you paying forward, the investments that people made in you throughout your career? So that's kind of what's been on my mind and what I'm thinking about as we're, kind of moving into this next phase.
And he's been a great chair espousing this. So he's putting his money where his mouth is.
Very inspired by the both of you. I will say personally, and just so appreciative of all the work the society does. And I think it's been great to kind of, watch from the side of the vantage point of working with Tom, some of the things that have happened, particularly in the last couple of years here. So thank you both. Appreciate your time, and thanks for sitting down.
Appreciate it.
Thanks,
Damien.
Take care.
So what do you think is the biggest challenge to the CPA profession today? And what'd you think of what Tom and Todd shared in the conversation? Let us know with an email to simplytax@bkd.com or on social media. You can find me out on Twitter, where I tweet about tax at Damien Martin CPA, on Instagram at TaxDad, on YouTube by subscribing to our Simply Tax YouTube channel, and out on LinkedIn. I would also greatly appreciate it if you would leave us a rating and review on Apple Podcasts or wherever you get your podcasts, as it helps others find Simply Tax. I'm Damien Martin, and thank you for listening.
The information contained in this episode of Simply Tax is based on data available as of the date of its release. BKD is under no obligation to update this information if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances. Any information provided is not to be considered as tax, legal, or financial advice. Please consult your tax advisor before acting on any matters covered.